Imagine a life where your money works for you, where you don't have to constantly worry about bills or retirement, and you have the freedom to live life on your terms. Sounds like a dream, right? But what if I told you that this kind of financial freedom is within your reach, and the key to unlocking it lies in something that many people overlook: investing? If you've ever felt overwhelmed by the idea of investing or have no idea where to start, you're not alone. Many beginners feel confused and intimidated by the world of investments. But what if there was a way to break it down into simple steps that anyone could follow? In this video, we'll guide you through the basics of investing, and by the end, you'll know exactly where to start and how to begin your journey towards financial independence. Investing isn't just for the rich or for those who are already financially savvy. In fact, anyone can start investing no matter how much money they have or how little they know about it. The key is to take small steps and gradually build your knowledge and confidence. So let's start by breaking down what investing is and why it's so important. At its core, investing is the act of putting your money into assets, things like stocks, bonds, or real estate that have the potential to grow in value over time. Unlike saving money in a bank account, where your money may earn only a small amount of interest, investing allows you to make your money work for you. This means that your investments have the potential to grow faster than the rate of inflation, allowing you to build wealth and achieve financial freedom. One of the most common reasons people shy away from investing is the fear of losing money. It's true that investing comes with risks, but it's important to remember that risks are a part of life. The key to successful investing is learning how to manage those risks and making informed decisions. By diversifying your investments, spreading your money across different types of assets, you can reduce the risk of losing everything in one go. Before diving into the world of investments, it's crucial to understand the different types of investment options available. The first and most well-known option is stocks. When you invest in stocks, you're essentially buying a small ownership share in a company. If the company performs well, the value of your shares can increase and you can sell them for a profit. However, if the company struggles, the value of your shares may drop. While investing in stocks can be volatile, it also offers the potential for high returns over time. Another common investment option is bonds. When you buy a bond, you're essentially lending money to a government or corporation in exchange for regular interest payments. Bonds are generally considered less risky than stocks, but they also offer lower returns. For beginners, bonds can be a good starting point because they provide more stability and predictability. Real estate is another popular investment option. Investing in property, whether residential or commercial, can be a great way to build wealth over time. Real estate investments can provide a steady stream of rental income, and properties generally increase in value over time. However, real estate requires a larger initial investment, and managing property can be time-consuming. For beginners, it may be best to start with a smaller investment or explore real estate investment trusts, REITs, which allow you to invest in property without the need to buy and manage physical property yourself. Now that we've covered the basic types of investments, it's time to talk about how to actually get started. The first step is to assess your financial situation. Before you invest, it's important to make sure that you have a solid financial foundation. This means paying off high-interest debt, building an emergency fund, and ensuring that you have enough savings to cover your day-to-day expenses. Investing should be viewed as a long-term strategy, so it's important to make sure you're in a good financial position before diving in. Once your financial foundation is in place, it's time to set your investment goals. Ask yourself, what are you hoping to achieve with your investments? Are you saving for retirement? Do you want to grow your wealth over time? Are you looking for passive income? Your goals will help guide your investment strategy and determine which types of investments are right for you. For example, if you're saving for retirement, you may want to focus on long-term investments like stocks and bonds. If you're looking for income in the short term, real estate or dividend-paying stocks might be a better option. The next step is to choose the right investment account. There are several different types of accounts available, depending on your goals and your tax situation. For beginners, the most common options are brokerage accounts, retirement accounts like 401(k) or IRAs, and tax-advantaged accounts like health savings accounts, HSAs. Each account type has its own benefits and drawbacks, so it's important to choose the one that aligns with your goals. Once you've chosen your account, it's time to start investing. One of the easiest ways for beginners to start is by investing in index funds or exchange-traded funds, ETFs. These funds pool money from many investors and invest in a diversified portfolio of stocks or bonds. Index funds track the performance of a specific market index, such as the S&P 500, while ETFs are similar but can be traded throughout the day like individual stocks. Both options provide instant diversification, which can help reduce risk. Another option for beginners is robo-advisors. Robo-advisors are automated investment platforms that create and manage a portfolio for you based on your goals and risk tolerance. They're a great option for people who don't have the time or knowledge to manage their own investments but still want to get started. Robo-advisors typically have lower fees than traditional financial advisors, making them a cost-effective way to invest. When it comes to investing, one of the most important things to keep in mind is that it's a long-term game. While it can be tempting to try and time the market or make quick profits, the most successful investors are those who stay patient and invest for the long haul. The stock market, in particular, can be volatile in the short term, but over time it has historically provided solid returns. The key is to stay disciplined, stick to your plan, and not panic when the market dips. Another important factor in investing is understanding risk. Every investment carries some level of risk, and it's crucial to choose investments that align with your risk tolerance. Some people are comfortable with taking on more risk in exchange for the potential for higher returns, while others prefer safer, more stable investments with lower returns. Understanding your own comfort level with risk will help you make better decisions. It's important to be honest with yourself about your risk tolerance and select investments that make you feel secure. Risk tolerance can change over time, so it's essential to reassess it regularly as your financial situation and goals evolve. One of the most effective ways to manage risk is through diversification. Diversification means spreading your investments across different asset classes such as stocks, bonds, real estate, and even commodities. This approach reduces the impact of a poor-performing investment on your overall portfolio. For example, if one stock declines in value, other investments in your portfolio may perform better, helping to balance out the loss. While diversification doesn't guarantee profits or protect you from losses entirely, it helps to smooth out the volatility of the market, offering a safer path for long-term wealth building. A diversified portfolio can also provide access to different types of growth depending on the economic cycle, which may allow you to benefit from different market conditions. As you continue on your investing journey, it's essential to keep learning. The world of investing is dynamic and ever-changing, so staying informed will help you make smarter, more confident decisions. Reading books on investing, watching educational videos, following reputable financial blogs, and staying updated with market news are all excellent ways to deepen your knowledge. The more you learn, the better equipped you'll be to identify new opportunities and avoid common pitfalls. Over time, your growing understanding of how markets work and what drives investment performance will empower you to make more informed decisions and adapt to changing market conditions. One of the biggest mistakes beginners make is try and get rich quickly. Investing is not a get-rich-quick scheme, and anyone who promises you fast returns is likely not being truthful. Quick profits may seem tempting, but they often come with high risks and can lead to significant losses. The best way to build wealth through investing is by staying consistent, being patient, and sticking to a long-term plan. Successful investors know that wealth is built over time through careful planning, regular contributions, and strategic decision-making. It's important to have realistic expectations and understand that investing is a marathon, not a sprint. You may face short-term market fluctuations, but staying committed to your plan and maintaining a long-term perspective is key to achieving financial success. Lastly, understanding that there will be ups and downs in the market is essential. You will face periods of volatility, but instead of reacting impulsively, take a step back and evaluate the situation. If you've done your research and chosen investments wisely, these downturns can be opportunities to buy at lower prices. The key is to stay disciplined and not let emotions dictate your decisions. In conclusion, investing is a powerful strategy that can significantly help you build wealth, secure your future, and gain financial independence. While the idea of investing may seem intimidating at first, it becomes manageable with the right mindset, a well-thought-out plan, and a willingness to learn along the way. The key is to start small, stay patient, and remain disciplined as you grow your investments. Whether you choose to invest in stocks, bonds, real estate, or other assets, the most important step is simply to begin. The earlier you start, the more time your money has to grow and work for you. Don't wait for the perfect moment, take that first step today. Even if you're unsure, starting now will give you a head start towards your financial goals. Remember, the best time to invest was in the past, but the second best time is now. Don't let fear or uncertainty hold you back. Embrace the opportunity and take control of your financial future. You have the power to shape your destiny, so why not start today? The journey toward financial independence begins with just one step, and that step is yours to take. Before we end, I want to leave you with one final thought. Investing is not just about making money, it's about building the life you want. So take that first step, stay committed, and watch your wealth grow. Don't forget to like this video, share it with friends, and subscribe for more tips on how to build wealth and secure your future. Your financial freedom starts today.